Which stocks are hedge funds investing in now? Of course, knowing that might give us an edge. And whilst this is not financial advice, and as we all know, investments can go up as well as down, what if we had the data from Goldman Sachs of over 800 hedge funds and 600 mutual funds to see if there was some commonality of stocks in each of those? Those names in a second. But first of all, well, not all hedge funds have had the easiest of years, of course. 2021's meme stock frenzy burned a lot of short sellers, with many hedge funds failing to account for or understand the sudden arrival of retail investors and how those retail investors enjoyed burning a few hedge funds. However, some hedge funds have embraced Reddit stocks like PaySafe, a favorite of retail investors, and about 50 other hedge funds. Just the breadth of ownership there tells you that they're all copying each other, and they're copying the retail clients as well. Indeed, it seems that hedge funds have learned from the meme stock craze and have found a way to take advantage of the shifting landscape. So much so that many industry insiders suggest hedge funds may make a resurgence. Is there evidence of this? Well, this year, hedge funds short books, i.e. where they expect investments to fall, so they're shorting the stock, expecting its price to fall. That generated their best alpha, that is, outperformance of the market, since 2010. Additionally, after 3 years of outflows, hedge funds saw over $6 billion in client inflows in the first quarter of this year. According to data from HFR, this brings the industry's managed assets up to almost $4 trillion. And there's reasons for these inflows. After a challenging decade, post the financial crisis, hedge funds produced excellent gains since the pandemic, posting returns of, and this is excellent by hedge fund standards, of 11.8% in 2020 and 13% in 2021. Another sign of the times is that many hedge funds have stopped taking new customer money. Brevan Howard, a fund that struggled in 2019, has turned its fortunes around to the extent that it shut its doors to new investors earlier this year. Great problem if you have it. Another factor affecting inflows into hedge funds is, of course, the unpredictability of China. These issues have led many institutional investors to pull money out of the region and invest with hedge funds instead. Future Fund, an Australian sovereign wealth fund, has pulled back during the regulatory fracas and is buying into renewable energy like Tilt Renewables, for instance. So with hedge funds performing relatively well, it's interesting to know where they're putting their client money. So here are some of those names. So recent Goldman Sachs analysis of over 800 hedge funds and almost 600 mutual funds suggested 9 stocks that both categories viewed favorably. So these were the ones which the hedge funds and the mutual funds like. The names are Adobe, full disclosure, I own it. Liberty Broadband, Square, I own it. Twilio. However, 2 very familiar faces also made the list, and this does surprise me. General Motors, somebody's been bottom fishing, and Wells Fargo. David Harding, who established Winton Capital in 1992, also laid out some of his fund's recommended stocks recently. Harding recommended Warren Buffett's Berkshire Hathaway, which seems a bit of a cop-out as his number 1 stock. And it, of course, interestingly, is huge on Apple with a stake of more than $130 million in that. So sort of really an investment in Apple, sorry, $130 billion in Apple. Tech stocks still feature among the most significant holdings in hedge funds that are looking for reliability and liquidity. Apple, Amazon, Bank of America, Visa are some of the big players that are still popular with hedge funds and on that Goldman Sachs list as well. I hope you found this useful. It's just part of my campaign to give more information about investing to everyday investors. Have a look at campaignforamillion.com for lots of free tools, resources, and education by me. Thank you very much.